On today's Breaking Views, after a somewhat bleak outlook for Britain's BAE Systems, what should investors do with Europe's largest defence contractor? British defence company BAE has finally agreed pricing with Saudi Arabia on its long-delayed Eurofighter Typhoon jet. The move saw shares jump 4% in early trading Wednesday to a two-month high of 455 pence. But today, shares have moved downwards due to this outlook. George Hay, Reuters Breaking Views associate editor, joins me now. George, thank you so much for joining us. I mean, looking at the share price reaction, would you say that this is an overreaction?
Well, we think it may be because what's going on here is the investors are looking totally at the outlook for next year, and they're saying, well, it could be 5-10% off earnings per share. That is a big deal, and they're just voting with their feet, and it's a kind of knee-jerk reaction. What we would say is kind of there are a few positives. The positive that you heard yesterday of the price increases, that is good news for BAE's operations in their Middle East region. So they're big in the US, they're big here, and they're big in the Middle East as well. And I think there's also a kind of slightly artificial effect of this one-off impact of the deal they've done, which was a kind of details of which were announced yesterday. That is going to have a big one-off effect on this year's results, and therefore the 5 to 10% drop next year is slightly artificial because it's a big jump this year that will automatically create a slightly a bigger than otherwise drop next year. So there's quite a few things going on.
Yes, and of course, as you mentioned, the spending cut isn't new. So the question is, George, are we going to see investors pile back into this stock, given that BAE is a very diversified company and it's managed to push through these price increases? Yeah,
well, so the point really is just that they've got. If investors think that that what's been announced for this year and the outlook for next year rather is a long-term trend, then they won't come back in. But we just feel that there is an argument to say, look, the US defence spending issues, that's the long-term trend. Everyone knows about that. BAE is taking some steps to cut its cost base. You've seen what they've done in Portsmouth in the UK. And just the very fact, I would reiterate the fact that they are making some kind of headway in the Middle East. If they weren't able to push through these price increases yesterday,
then we might have seen a bigger fall.
Well, then it would be harder to kind of say, well, look on the bright side. But we do think. I mean, the short answer would probably be there should be some kind of people coming back in.
Right. Okay, we've got to leave it there. We're talking about BAE today on Breaking Views with George Hay. Shares fell today, but Breaking Views' stance is perhaps it was overdone by investors. For more agenda-setting financial insight, watch our US Breaking Views show every day at 12:30 Eastern, 17:30 GMT. I'm Angeline Ong. This is Reuters.